Imagine you worked your entire life, saved every dollar you could, built a business from nothing through years of failure and persistence, and ended up with more money than most countries have in their entire treasury. Now imagine that after all that, after building one of the greatest fortunes in human history, you looked at every investment available in the world, every stock, every bond, every business, every opportunity, and you decided none of them are worth buying right now. So you just held the cash. $150 billion, sitting there, doing almost nothing. That is exactly what the greatest investor in history is doing right now, and Wall Street is furious about it. Analysts are calling it a mistake. Headlines are mocking him. People are asking, has he finally lost his edge? But here is the question nobody is asking. What if he sees something the rest of the market is completely missing? To understand why $150 billion in cash is one of the most important financial signals of 2025, you first need to understand who this man really is. He started investing at 11 years old. His first stock dropped almost 30% immediately after he bought it. Most people would panic. Most adults would panic. He held. The stock recovered. He sold at a small profit. Then he watched it keep climbing, long after he sold, all the way to 5 times what he paid. That experience burned 2 lessons into him permanently. Patience beats panic, always. And when you find something genuinely valuable, hold it. Let the real value reveal itself over time. He carried those 2 lessons for the next 70 years. By 30, he had already turned $10,000 into over $1 million. He built his holding company into something the financial world had never seen before. Not a hedge fund chasing quarterly returns. A permanent machine designed with one single purpose: to compound money across decades. He has lived through 14 recessions, every major crash of the last century, and every single time, he did the same thing. When others were buying during the good times, he was quietly selling. When others were desperately selling during the panic, he was calmly buying. He is the most consistent contrarian investor in the history of modern finance, which means when he moves $150 billion into cash, you pay attention. So why does a man who built his entire career on buying great businesses suddenly stop buying? The answer starts with one concept that most people never learn. It is called the Market Valuation Indicator. Here is how it works. Take the total value of every publicly traded company in the United States, every stock, every exchange. Then divide that number by the GDP of the country, the total value of everything America produces in an entire year. If the result is below 100%, stocks are cheap. Good time to buy. Around 100 to 120, fairly valued, normal times. Above 150%, getting expensive. Be careful. Above 200%? That means investors are paying more than $2 in market value for every single dollar of actual economic production. Right now, that number sits above 200%. The last time it reached this level was 1999. Months before the dot-com crash wiped out $5 trillion in wealth. And before that, 1929, the year the Great Depression began. 2 times in recorded history has this indicator reached 200%. 2 times. 2 catastrophic crashes followed. He doesn't announce this on television. He doesn't write warnings in newspapers. His portfolio says it for him. When there is nothing cheap to buy, he doesn't buy. He waits. And while he waits, the cash earns 5% per year in short-term government bonds. 5% of 150 billion is $7.5 billion per year, just in interest, while he waits for the right moment. But here is what most people miss. The cash is not the investment. The cash is the weapon. Think about what happens during a major crash. When panic sets in, almost every investor in the world is in the same desperate position. Fully invested, unable to buy more, bleeding. And there he is, $150 billion, patient, ready. In 2008, as the global financial system nearly collapsed, he invested $5 billion into a major investment bank. Not on their terms, on his terms. A guaranteed 10% annual return. They agreed because they needed his money. They needed his credibility. Right now. He got those terms because he had cash when nobody else did. That is the weapon. And right now, he is pointing it at the inevitable next crash, waiting for the right moment to fire. Now, here is where the story becomes much larger than one man's portfolio, because he is not doing this alone. Right now, the most sophisticated money in the world is moving in the same direction. Hedge funds are carrying record levels of cash. The largest sovereign wealth funds on Earth, the ones that manage the savings of entire nations, have quietly shifted billions out of stocks and into safety. This is not a coincidence. What the smart money sees, what the data confirms, is a market running on borrowed time. For 15 years after 2008, the central bank kept interest rates near zero. Free money. For 15 years. Companies borrowed billions at almost no cost to buy back their own stock. Investors borrowed cheaply to buy more assets. Prices across the board inflated. But none of that reflected real economic growth. It reflected cheap money. And in 2022, when inflation surged and rates were forced higher, the free money era ended. Now the cracks are showing. Commercial real estate is in deep crisis. Office buildings across America sit 40% empty. Regional banks are under pressure. Credit card debt has hit an all-time high, and the government is spending over $1 trillion per year just on interest payments on its existing debt. Not defense, not healthcare, not infrastructure, just interest. Every major correction of the past century was preceded by exactly this combination. Overvalued markets, high levels of debt, rising interest rates, slowing growth. 1929 looked like this. 1999 looked like this. 2007 looked like this. 2025 looks like this. The most disciplined investors in the world are reading the same page. They are not panicking. They are positioning, because they know what history has shown every single time. After the crash comes the greatest buying opportunity of the decade. And the only investors who can take advantage of it are the ones who prepared before it happened. So what does any of this mean for you? Not for a hedge fund, for you, a regular person with savings and a life to protect. 3 things. First, cash is not always the enemy. For years, the dominant advice has been simple. Invest everything. Stay fully invested, always. In normal conditions, that is reasonable. But in a market trading at 200% of GDP, with cracks forming across the system, choosing to hold some cash is not a failure of imagination. It is a deliberate strategic choice. Cash earning 5% in short-term bonds while you wait for better prices is not lazy, it is smart. Second, the best opportunities always come after the worst moments. This is the deepest truth of his entire career. Not his ability to analyze balance sheets, not his talent for finding great businesses. his willingness to act with conviction precisely when everyone else is consumed by fear. Those deals in 2008 were only possible because he had not spent his cash during the bubble years before. You don't need 150 billion to apply this principle. You need a plan. You need some portion of your savings in liquid, accessible form. And you need the emotional discipline to deploy it when the headlines are screaming disaster. Third, watch what smart money does, not what it says. Right now, there is no shortage of voices telling you to stay calm, keep buying, just stay invested. But he is not talking. He is sitting quietly with $150 billion in cash and waiting. His actions say everything his words do not. When the greatest investor in history moves $150 billion out of stocks and into cash, that is a message. The only question is whether you are paying attention. He has survived and thrived through more financial crises than almost anyone alive. And right now, his most powerful statement about the state of the financial world is not a word he has spoken. It is a number. $150 billion in cash, waiting. Whether you have $1,000 saved or $1 million, the principle applies to you. Understand the system, position yourself before the storm, and when everyone around you is panicking, be the one who is ready. That is what we do on this channel every single week. Subscribe and hit the notification bell, because the next video pulls back the curtain on something your bank does every single night while you sleep, and they are definitely not going to tell you about it. See you there.